Good morning, everyone, and welcome to the Daily Hunt for Multi-Baggers on this Sunday, January 4th, 2026.
Great to be here, Ethan. Our AI analysis today, based on data from Saturday, January 3rd, 2026, flagged a few interesting companies that were generating a lot of buzz across various social media discussions.
That's right. We had some truly hot leads with thousands of user discussions covering a couple of stocks. And the overall market sentiment, well, it's quite a mixed bag today. A blend of optimistic growth stories alongside significant financial warnings. Let's dive right into it. Kicking things off with NIO, which generated a good amount of discussion. Our AI-generated insights show a neutral to cautiously bullish sentiment. Users are really pointing to NIO's strong operational performance. I mean, they delivered 326,028 vehicles, up 47% year over year. That's impressive, especially when you compare it to competitors like Rivian, whose deliveries were down. Many believe there's a significant undervaluation in the market, largely due to its status as a Chinese company, and they anticipate future profitability could really drive a re-rating. Some users even speculate it could 3x if they announce profitability.
Well, Ethan, that's certainly an optimistic outlook on the potential, and the delivery numbers are compelling. However, when I look at the key performance indicators, the picture gets a bit cloudier. We're talking about a net profit margin of negative 0.31 and an earnings per share of negative 1.65. These are deeply negative figures, indicating significant ongoing financial losses. While the recent news about record deliveries aligns with strong revenue growth, it doesn't solve that fundamental profitability issue just yet. Plus, that debt-to-equity ratio, sitting at an extremely high 228.65, suggests a heavy reliance on debt financing. It definitely flags it as a high-risk speculative investment from a risk management perspective.
I hear you on the debt, Brooke, but the potential here, it's about future growth. The market's perception of it being undervalued because it's a Chinese company, that's a bias that could correct. If those record deliveries continue to translate into improving economies of scale, future earnings reports could look a lot different and validate the bullish anticipation from some users.
And that's fair, Ethan. The potential for improvement is there. But the current metrics, especially profitability and debt, show a company with significant financial challenges that currently overshadow its sales growth. For an improved rating, we'd need to see a substantial reduction in those losses and a healthier balance sheet. As for past mentions, NIO has never been rated on our podcast before. Based on our AI-generated insights and the underlying financial health today, I'd say it's still too risky for broad investment. So for NIO, despite the optimism about its operational growth, the financial caution prevails. That's right. Final verdict? Stay away. Moving on, BYD generated even more buzz with 33 posts. This company, just made headlines for becoming the world's top EV seller with 2.26 million units, surpassing Tesla's deliveries in 2025. You have to appreciate that kind of market dominance and sheer scale. That's a massive achievement. True, Ethan. Market share is one thing, but profitability is another entirely. Our AI analysis shows a strongly bearish sentiment. Users are highlighting that despite the massive sales volume, BYD is reportedly struggling with profitability, particularly in its domestic market. There's even talk of almost no profit on local sales due to intense competition and price wars. That incredibly low price-to-equity ratio of 3.83, that strongly suggests the market is already anticipating significant challenges to BYD's future earnings, despite its current revenue. But they are selling a lot of cars, Brooke. That kind of volume creates a powerful brand and distribution network. Sometimes you have to fight for market share first and profitability follows. The news certainly highlights their global lead. Perhaps, but the data suggests major headwinds are already in play. Revenue growth is at 4.5%, which is their slowest in 5 years, which indicates a mature and highly competitive market where BYD is struggling to maintain its previous rapid expansion. Add to that a high debt-to-equity ratio of 96.26 and significant insider selling, nearly 358,000 net shares sold over the last 6 months, which suggests those closest to the company aren't confident in its near-term stock appreciation. The news confirms profit declines in Q2 and Q3 2025 due to fierce competition and relentless price wars. These aren't just temporary bumps. They're structural challenges that are already impacting KPIs, like net profit margin and EPS. It sounds like the optimism around their sales numbers is really being overshadowed by those financial pressures and a tough competitive landscape. Exactly. No prior mentions on our show for BYD either. The current outlook, despite the impressive sales volume, points to significant financial risks and sustainability concerns, making it a very challenging environment for investors. Final verdict? Stay away. All right, Brooke, quite the challenging day in the EV space, it seems. A lot to unpack. Definitely, Ethan. A lot of growth potential overshadowed by some serious financial hurdles today. But for our listeners looking for where to focus their own deeper research, our AI has compiled today's list based on our discussion. Investigate as buy? None. Investigate as cautious buy? None. Investigate as speculative gamble? Neo Inc. And that wraps up another episode of The Daily Hunt for Multibaggers. Before we sign off, remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for tuning in this Sunday, January 4th, 2026. We'll catch you next time on The Daily Hunt.